The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending November 6th, 2020. Well, let's start off like I normally do with the stock market. And this week, what we saw with gold was that the global gold stock index, the GLD, has gone to its highest level in nearly 2 months. Gold has been in a downside correction since about August. The Vectors Gold Miners ETF, the GDX is above its 50-day moving average, which of course is a breakout and is bullish. And then Newmont, as well as one of the majors, is doing well, and it comprises part of the GDX. I think a lot of this has to do with a weakening dollar. The dollar index is basically at a yearly low. And also the stock market rally that everybody seems to be very exuberant about. I think a lot of this has to do with short covering. I think a lot of the hedge funds, big managed money, the pros, the professionals, were short. And they have covered their short positions. And this has caused a rally in the metals, in the stock market, and basically everything. And that is my take on it at this point in time. I will go ahead and speak a little bit further on the stock market and move on. Last comment on the stock market really is this lower dollar has caused a breakout in the emerging markets indexes. So the emerging markets are toying with a high for the year. If you look at the EEM ETF, what you'll find is that it's pretty close to the high of a year ago, which is bullish, obviously, for the emerging markets. It also shows what I just said, the converse, meaning that the U.S. dollar looks like it's weaker, and the yuan, any of the ETFs that are strongly yuan, have been doing well of late. So I'm here on the blog. This is one of the latest ones here. Does the election really matter? You can, of course, listen to that. The other one I think you might like is this interview I did with E.B. Tucker. Wrote Why Gold, Why Now? It's really, as I said in the interview, is one of the most fun reads on gold I've read in a long time, and also really very much enjoyed the interview. One I want to bring your attention to that I put out very recently was We the People versus Google. I do not have an update on that right now. I've been busy doing other things, but it's a very important situation to bring basically freedom of speech versus the situation that we are facing with being censored left, right, and center by some of the tech companies. And I don't want to get into the legalities of it, because a private company is allowed to do things that other entities are not allowed to do. So nonetheless, very interesting to watch. So first up is from Market Watch. Gold logs biggest weekly rise in 3 months as the U.S. dollar slumps. Gold futures finished higher Friday to extend the gain to a 7-week high Friday, notching the biggest weekly rise since July amid the sharpest weekly fall for the U.S. dollar since March. Next up, this is from claudiograss.ch. Claudio Grass, well known in the gold community, quotes J.P. Morgan, "Gold is money, everything else is credit." And this is an interview with Rafi Farber. It's part 1 of 2 parts. By now, it's probably obvious, even to the most naive of mainstream narrative followers, that we are well past the point of no return on many fronts. Politics, on a national and global level, are never getting back to quote-unquote normal. The economy is already knee-deep in a severe recession, while social frictions and public discontent with governments, institutions, and all kinds of rulers and central planners is on a sharp and dangerous trajectory. Very good article. I suggest you read it this weekend. One of my favorite personal websites, personal favorites, I should say, Mises Institute. This is basically Austrian school. Anyway, you can, I have it bookmarked. Digitization fueled by easy money and COVID lockdowns is a form of malinvestment. First, let's see here. I'm not going to read the first paragraph here. The narrative, according to storytellers, businesses under the pandemic had no choice but to experiment with their workforces operating at home, and surprisingly, they found that this was eminently feasible and likely economic, at least in some degree. Goes on to talk about the ups, downs, and in-betweens of what's going on and what's really happening in the economy. These guys are pretty straight shooters. I don't agree with everything, but for the most part, one, to make you think, which is one of my goals for everybody that follows what I do, say, in my work, and beyond that, go out and explore, question everything. Zero hedge, always good, always something to read daily. The risk of double dip soars as pandemic rages. The best has yet to come, a phrase that has frequently been echoed by members of the Trump administration, referring to the greatest ever economic rebound in American history. But the administration's economic hype was mainly seen ahead of the November 3rd presidential election, likely just cheerleading, that is, because now, days after the election, which is still undecided, high-frequency data of countries in the Western world and Japan indicate the possible start of a double-dip decline in economic activity. Bloomberg bought an array of high-frequency indexes for countries in the Western world and Japan, including data from Bloomberg Economics, Google, MoveTrap, Indeed.com, ShopTrack, Opportunity Insights, and other databases that show the global recovery is out of juice. Be warned. It's true. So let's take a look at gold. Year to date, we started down here, and basically we have gone up, and then we have flattened out. I am happy to see that we did what I just talked about earlier in this video update, that we've hit, I guess it was a 6 or 7 week high, which is wonderful. But in the context of this trading range, we're basically nearing the higher end of that trading range is what it amounts to. I still think that we're probably going to go the next 2 months, November, December, within that trading range. We might get above this one. A lot of people are calling for $2,000 gold at the end of the year. I won't say no. I don't know. What I will remind a lot of viewers is that we have seen the lowest print in gold many years in a row, actually, back 3-4 years ago, through 2015. So it's been a while, 5 years or so, but I don't know. I'm not convinced. I'm convinced we're in a long-term bull market. I'm convinced the next leg up is happening. But my old adage that the silver market, but you could apply it to gold somewhat, it will scare you out or wear you out. I still think it wouldn't surprise me again to see, this type of, situation for gold for a couple of months. I do think we'll get the traditional lift in the first quarter of the new year. Time will tell. And for silver, similar chart, because we had this big dip in March that hit 12. But since then, of course, we've come up. Pretty much went parabolic in there. Flat line around 27 for quite some time. And now we've been in this trading range in the 22 area to 25. Similar to gold, we're really within that bandwidth. Are we going to see the $30 print in silver that we saw back here before the end of the year? Answer, I don't know. I doubt it. Again, along with gold, they are correlated about 85%. I do think that the stocks are indicating some strength here. I just looked at the HUI a moment ago, but I'm not convinced yet. I want the market to give me more information before I commit any more funds going forward for the rest of the year, and we will wait and see. Well, I do like to stay away from politics, although it's impossible to do it. This is a little offbeat. You may not have caught this one from the New York Post. Vladimir Putin is planning to step down next year as speculation swirls in Russia that the longtime president may have Parkinson's disease, reports said Thursday. Moscow political scientist Valery Soloviev told The Sun that the Russian strongman's 37-year-old girlfriend and his 2 daughters are pushing him to leave the office. There is a family. It has a great influence on him. He intends to make public his handover plans in January, it was said. We'll see. So I'll go ahead and sign off for this week. Remember that if you are not a member of the free newsletter, just come to the main website, themorganreport.com, and sign up right here with the first name and primary email address. Click the button, and away you go. So all the updates that I do, videos, the weekly perspective, are all provided for you free of charge when you sign up for this. And if you don't feel like it, that's fine. You can just go here to the blog, and almost all of them are posted here for you as well. And if you're so inclined, once you're on the blog page, you can go to the YouTube channel, which is there. And you can go to the Twitter feed, which is there. And of course, you can choose our LinkedIn presence, which is there. That's it. Wishing you all the best. I'll be back with you next week.